Data-driven insights for serious traders. As the closing bell approaches, momentum is analyzed, tomorrow's key price levels highlighted, and the setups that matter most broken down. This is Trading the Close with Verified Investing.
Hey everybody, welcome to Trading the Close. Of course, I'm Gareth Soloway, Chief Market Strategist, and I am subbing in for Drew, who is again away on vacation. He will be back tomorrow. All right, what a day. We had a big rally back on Wall Street, basically markets catching 50% of what they lost on Friday. Obviously, over the weekend, we saw a walk back in a lot of the threats from both China and the Trump administration and Trump himself. They were walked back and basically the markets responded. Now, the biggest thing that the takeaway here is that the administration, the Trump administration, and even China are showing very little ability to withstand a market decline, meaning as soon as the stock market dropped 3 to 4% on Friday, they all backed away. And what that does is it sends the market a signal, a clear signal that if there's any downside in the market, the administration and the Chinese government will back off on threats or action on policies. And again, I think that sends a concerning signal because again, I mean, it was only a 3% drop on the S&P, not even a 3% drop on the S&P. If that's all it takes to back things off, that's not, number one, that's good for investors right now. But in the scheme of things, that's concerning that the economy, both in China and the US, can't take more downside. All right, let's get into the charts. As always, folks, what we do here is charts, and technical analysis. And one of the things here that I'm watching on the S&P 500 is this chart here. So we know we have this wedge pattern, right? This is the wedge pattern that I've talked about in my trading game plans over and over again. We had a break below that. Now, number one, this was not a confirmed breakdown. So even with the drop and a close well below this major trend line, you do not have a confirmed breakdown just yet. Number two, what we're watching is on the bounce, do we get back above this trend line here? Now, this trend line is important because once we get back above it, or if we get back above it, then you can no longer confirm a breakdown, right? You'd have to restart over with a close back below with confirmation. So as long as we stay below, you could technically confirm a breakdown on the chart. So great to see the markets bounce back. If you're a bull, it's great to see the bounce back, but we didn't get back above that key trend line to reestablish the zone or the wedge pattern. And that is something as a trader and an investor that's now becoming paramount to watch and see if we do. All right, so just to reiterate, we have to watch. Can the S&P recapture this trend line on a daily closing basis? If not, the chances are we're going to go like this and eventually head down sharply. Okay. So again, just the few things that I am watching here into tomorrow. Can they get the market back above here? If you get the market back above here, by the way, we then start watching resistance right here again, which clearly has worked as a rejection point for the market in the near term. Okay. All right. Next up, let's take a look at the NASDAQ 100. The NASDAQ 100, yes, it's having a good day, up 2.17%. But at the same time, what do we know? We have a market here very clearly that is still below a major trend line, right? So again, the major trend line here is this trend line, which was broken. It's a connector of the low from April, the liberation sell-off low on tariffs, all the way through this lowest point, and it kisses right here. We broke below it. There's no confirmation of a breakdown yet, but we are still technically in a warning zone. Anything below this trend line recapture is still warning. It's kind of basically like a yellow flag. It's not a red flag. It's not a, oh my goodness, this is a market confirmed breakdown, but it is a yellow flag of caution for us as traders and investors. And remember, everything we do here is based on probability. And so once you confirm to the downside, it's like, okay, market's confirmed to the breakdown point. We're now going lower. There's basically an 80% chance that we're going lower once we confirm. We're below the line, but unconfirmed. So it's much more in like the 50-50, 60-40 favoring downside zone. Like it's a warning sign, but it's not a very high probability of a breakdown just yet. And likewise, if we were to get back above this level, then the markets start favoring the upside again. Probability moves that we could start to push higher. And essentially, that's the angle where you would then say, okay, right now we're kind of in this neutral, maybe slight bullish bias. But if you get back above here, it goes back to a bullish bias. That's what the probabilities would dictate. And remember, as I say, guys, no BS, just charts. And what charts mean to me is verified investing is it's all about probabilities. There's no emotion involved. There's no, oh, I think this narrative is a good sales point. It's nothing like that. It's just what are the charts telling us? All right. Let's go to the DXY today. The dollar today, we did have an up day, so we had a down day on Friday. The dollar, again, remember, this continues to have this inverse head and shoulder pattern that's been playing out. There's your neckline. This should play out to this zone up here around 101. Once it gets there, the inverse head and shoulders has completed, and you'd start to expect a pullback on the US dollar. That line is also important because it's a former major support level. So in technical analysis, remember, when you have a trend line of support and you hammer on it, right? Support, support, support. Once you break, it now becomes resistance, right? And the idea is we've broken this here, right? We came back and attacked it. We missed it here. If we come back here, the idea is we'll likely get rejected, as not only would the inverse head and shoulders, which is a bullish pattern, have completed, but then also it's into a major resistance trend line that was formerly support. All right, next up, let's look at the 10-year yield today. The 10-year yield continues to stay weak, continuing to break lower here. Now, actually, check that. The 10-year yield, the bond market is closed today in observance. This is Friday's action. But the important thing here is on the weekly chart, we have now officially closed below this line. It's the first time here on the weekly, right here, we have closed below the trend line. Unconfirmed breakdown, but to me, this is, again, a yellow flag that we need as investors to watch. Why? Well, if yields are going lower, what does it tell us about the economy? Is the economy doing great if yields are going lower? The answer is no. The economy is likely stalling and stuttering, which is what we're seeing in the labor market, and that indicates that the Fed is likely to lower rates further, which means the 10-year is going to be pulled down. Now, remember, the Fed doesn't control the long end. They don't control it, but they certainly can influence it. And that's why we have to be aware of that chart. So on the 10-year yield, the first weekly close below, okay, then we look to see if it confirms. If it confirms, my guess is we're headed to about 3.6% on the 10-year. Once you get in this range, you'll start to hit a lot of support, and we'll reevaluate there. NVIDIA today bounced back, but honestly, not that big of a bounce back. I mean, again, it's not like it recovered fully from the drop on Friday. It got back about 2.8% of that drop. But really, today was a day where certain stocks were in the powerhouse. What do I mean by that? Well, anything uranium, nuclear reactor, energy sector related like that, those were off to the races. And the supercomputer like Rigetti, those stocks were having monster moves. Now, other stocks that were left behind, like look at Robinhood today. I mean, this has been one of the biggest momentum plays, and Robinhood was basically flat to just slightly positive. But if we look at, for instance, Bloom Energy up 26% today. Oklo up 16%. Rigetti, look at this move. Rigetti on the daily chart up 25% on the day. Huge moves in these names. So this is where the money was flowing today. We talk about money flow. Where is money going? It's going towards these levels. Now, as a technical trader, am I rushing out to buy Rigetti? No way. But I'll tell you something. I will be looking to short it as a day trade tomorrow at specific technical levels. And so as a trader, I'm never going to be buying and chasing. Like that's for whoever wants to chase and play Russian roulette, more power to you. Maybe it goes to 70, 80 bucks, or maybe it collapses back to $40. When it's this extended on the chart, I'm always looking at the counter trend move at these points. Now, obviously, when I go to look and trade it intraday, I'm going to be finding specific factors or a thesis to do so. But again, Rigetti, amazing move up here. Look at the weekly Rigetti chart. I mean, is that incredible or what? From $15 at the beginning of September, we're now in the 6th week, and it is at $55 per share. Absolutely astounding. All right. Now, the question becomes, right, is there a technical level here to trade on Rigetti? And the answer is not really at these levels, right? So what I'm looking for is tomorrow as a trader, I'll be watching this, and if it gaps up, I'm going to be watching for a topping tail, some sort of intraday reversal signal that'll lead me to believe and say, okay, the odds now favor some sort of pullback. And again, it's not like I'm going to be holding it for a long term, right? I have no idea where Rigetti will be in a month or in a week from now, but on an intraday basis, I will be zoning in to a reversal intraday signal. All right, gold. We got to talk gold, guys. Gold, powerful here, folks. You can see here, let's put on our trend lines here and get everything kind of matched up. So if we look at this on gold, we have this upsloping trend line here. If we do a parallel, we can see that we have broken through on a daily close here. Now, remember, unless it confirms, it is not a confirmed breakout. So yes, it closed above. Now tomorrow, can it confirm? If it confirms, then you basically go back and say, okay, well, what's your next level here? I mean, at this point, you're even into this zone here, which is pretty impressive, an upsloping factor or parallel channel. But still, I mean, we are in incredible upward momentum on gold. I mean, again, gold generally does not move this violently to the upside. But over the weekend, we heard that stablecoin players were buying gold. Again, I'm trying to mesh that with my mind of like, wait, a stablecoin is supposed to be equal to the dollar. Why are they buying gold? But listen, I'm not here to judge. Companies can do whatever they do. That's fine. But to me, again, it's like, so wait, do they not believe in the staying power of the dollar? I guess not. But even though they do have a stable coin that's matched to the dollar, in any case, it is what it is. It's neither here nor there. But gold continues to rally, and so did silver today. Silver closing above this trend line here. All right. Now we watch to see, does it confirm tomorrow a breakout? Now, I was in the camp where once we pierced this line, we would get a pullback. I did short silver in my service, my commodity service, and we made a quick 5% the day of, which was great. I did short a little bit today at the highs, again, with members, but even I still have an upside max out target of $60 to $62. So if we confirm tomorrow, this could dictate that we're headed now up to 60 to 62 bucks on silver. And again, that would be quite the move to the upside. Now, quickly just checking in on platinum. Let's take a look at what platinum did today. Platinum, really nothing crazy. It did put in a topping tail on Friday, so up just a little bit. And then palladium here, that continues, although it didn't take out Friday's high, but I still have a good resistance level right up in this range here around the 1600 level. So we'll see if we get into that zone on palladium. Now, one thing just to note, the market's got a good bounce today, but remember, the bond market was closed. And one of the old adages in Wall Street is what we used to say is when the cat's away, the mice will play. The bond market is a massive market. And when they're closed down, the markets tend to rely on retail investors, which could be one of the reasons why you saw a lot of these smaller companies, Oklo, Rigetti, Bloom Energy running to the upside. It was really a retail-centric day. Tomorrow, the bond market is obviously open again. And I'm curious to see what the markets do when the bond market reopens. And the reason I bring this to your attention is going back to the S&P chart. Do we push back above this when institutional money starts coming back fully, or do we see the S&P start to pull back and trade back down towards these lows? And so really tomorrow is going to be a fascinating day to see, do we attack and get above this yellow trend line and reestablish in kind of our bullish uptrend that we've been in, or does it still stay below and potentially start to roll over a little bit more? All right, next up, we got to talk about oil here real quick. Oil getting a bounce. It did break below this key support on Friday. No confirmation yet, and it did get a bounce today. And then natural gas, nat gas, again, just coming down. A lot of support here around $3.33. It's kind of hovering, had a pause day today, not much there. Bitcoin's holding pretty strong here. All right, now again, key levels on Bitcoin. This is your pivot line right here. As long as we don't confirm below this, Bitcoin could trade back to 126,000. All right, this is your new line in the sand. If you're a bull, you got to hold the line here at 110,000 on a daily closing basis. If this breaks, you're heading down here to 92,000-ish or so. At least at this point, that's where the trend line sits. So let's watch closely right now. Bitcoin's having a good bounce, but keep in mind, the stock market also had a good bounce. We have to monitor that. As long as the stock market continues to float, maybe this can hold up and continue to trade higher. Again, we'll watch that big level there. We were seeing altcoins like Solana having a nice move today. Take a look at this. I did pick this up on Friday's dump with my members of Smart Money Crypto. We're deep in the money. We got in, I think, at 192 or so, 182, excuse me, right here, 182. So nice move up on that. But again, I still haven't taken profits, but I got to say, it's getting to that point where I'm getting very intrigued on potentially just yanking it off the table after such a quick move to the upside, trading at 207. All right. So government is still shut down. Okay. So that's number one. We haven't had a lot of economic news, but we are getting into earnings season. The last thing I'm going to leave you with is important. Tomorrow morning, banks report. We have JP Morgan and a bunch of other major banks reporting earnings tomorrow before the open. That's going to act like our economic news for the day, meaning that we're going to look to see how is the consumer, how much money, what are the loan defaults, right? We see credit card defaults now at levels not seen since 08, 09, right? So there's a lot of concerning issues that we're seeing in the underlying economy. What do the banks tell us about this? Because remember, the banks are generally the ones making these loans. Are they seeing defaults start to spike even further? And so this will act as a good barometer for what the economy is doing. We should have that news by around 7 in the morning tomorrow, Eastern time, and the markets will likely trade off of it. You guys have a great one. Thanks for coming out. And again, Drew will be back tomorrow to take you guys through. Have a great one. Thanks again, guys. Take care.